Hello, and thanks for joining us today. Today, we're talking about getting a home loan. We're actually going to talk about getting a home loan, even if it's your first home loan, even if you struggle before to get approved. We're going to talk about the insider industry secrets on actually getting approved and not just getting a home loan, but being able to get the most money and being able to get it at the best terms. And with us today to share is Stephanie Boyd. Now, Stephanie's a Sacramento local serving those in California and those leaving California with their home mortgage needs. Now, after a successful career in criminal investigation, as one of the youngest criminal investigators in Sacramento County, Stephanie went on to pursue her dreams of joining the family real estate business. Now, she spent years learning the ins and outs of real estate and lending with her family's brokerage. And now Stephanie has both a real estate and mortgage broker license and is the CEO of her own corporation. Stephanie, thanks for joining me today.
Hi, Ty. Thank you so much for having me.
So I got to ask, did your family okay that you started on your own, like that you left the family business?
Well, we've had some discussions about it, but yes, we're all on very good terms.
All right, good. Good to know. Good to know.
Yeah.
I need to know because my kids get to be that age. I don't know how I'm going to handle that. So I might be coming to you for advice.
Oh, yes. Well, delicately, that's how we handle it.
I like that. I like it. So, like, what are your specialties is to help like first time home buyers, right?
Absolutely. So, my original background, as you mentioned, is in criminal justice, and I worked for the public defender's office. So, my job there was helping the underdog. And advocating for the underdog. And so it was kind of a natural progression to move into mortgages and first time buyers. So originally, back in the early 2000s, we had a lot of HUD homes. So we were able to get people into HUD foreclosures for 500 down, zero out of pocket. And as the times changed. HUD homes kind of went away. We don't see a lot of foreclosures these days, but we are still able to help first time buyers get into their very first home, oftentimes with zero out of pocket.
That's
So,
awesome. So, what kind of loans are available for first time home buyers?
well, there are FHA loans, which allow you to put as little as 3.5% down and get a really great interest rate backed by a federal program and insured federally to help more first time buyers get into housing. And there's actually even conventional loans available for first time buyers that let you put as little as 3% down. So we've got down payment assistance that works with conventional and FHA loans in a combination. Different programs have, some of them have grants, some of them have second mortgages, some of them have third mortgages that can all total up to getting you 6.5 to 7% of the purchase price. So that covers your 3 to 3.5% down payment plus another roughly 3% to pay for closing costs.
Wow, that's really creative. We talk about that in the business financing world of stacking financing to accomplish that goal. And that's like what you're doing. That's cool. So you get an FHA loan that requires 3.5% down and then use all these other means, these other programs a lot of brokers don't know anything about, and then get that to actually get the money to cover closing costs and everything. So somebody can come in with little to basically nothing out of pocket.
Yeah, absolutely. In fact, sometimes what we see is our buyers write $1,000 earnest money deposit and they get 1,500 back at the close of escrow.
Wow.
Uh,
That's when you know
so
you're good.
yeah. So, the best rates are available if you can come up with your down payment. So I always advise my clients to hit up grandma and grandpa for a gift, or, mom and dad oftentimes are more than happy to help with a gift to get their young new homeowners into a purchase. So the money, although it's grant money that you don't have to pay back a lot of times. It's not exactly free. So it does come attached to a slightly higher interest rate. So these are self funding programs and uh, they're administered through state agencies here in California and elsewhere. Um, and so they're actually funded through having a higher interest rate. So typically they have zero payments and zero interest and nothing is due till the back end. So 30 years later, when you pay off your loan, your second mortgage that you bought for your down payment assistance is going to be due. Or if you sell it or refinance before 30 years, then you pay it off. But a lot of them don't have payments, no interest. It's almost like free money.
Hmm. Now, what about what's it like compared to renting? If somebody that's renting a home in today's market and then goes to buy, like, do they usually expect their payments to be significantly more or less? Is it possible to go from a rent to an own situation to keep your payments roughly the same?
That is getting a little more challenging as prices increase. For sure, 2 years ago, that would have been a much easier question to answer. But we've seen in this market here in California, we've seen 18% growth in the market. So, you know, these houses are getting more and more expensive every day. And now with interest rates creeping back up, 2 years ago, we were closer to zero interest. A lot of even my investors were getting 1.75% on a 15-year fix, So yeah, as the market changes, you might see yourself paying more than you would in rent. But you're building your own equity and you're building your own retirement. You're building your own future. You're not paying for your landlord's kids to go to college at that point. So, the market's always going to change ups and downs. But it's definitely always a better investment in your own family and future to pay your own mortgage for sure.
Sure. What are you doing to get buyers into homes? Because in Tampa, it's tough. Like, I mean, it's so competitive that you're competing against cash buyers. And I actually mentioned that the other day to somebody. It's funny. She sells new apartments in St. Petersburg, Florida. And I said, what are you doing? You're requiring people to put 30% down to build this thing. But what if their mortgage only requires 20% down? She's like, I don't know. We mostly only deal with cash buyers. So what do you do in this kind of market where so many people are paying cash? And we have this in Florida because they're coming from New Jersey, New York, and California here. And they are like, wow, you can buy this for $1 million. And so you're competing with these cash buyers. What are you learning you can do to get buyers to be able to buy these homes when they're getting a mortgage versus, when they're competing against cash buyers?
Well, that is a great question. And it certainly is a very competitive market right now. And so, one of the things I do is get my buyers fully underwritten before I send them out shopping. So that way, there's no more questions. So we can send out an offer that has very short time periods. So by having the buyer fully approved before they get into contract, we can offer a 15 or 21 day close of escrow. Um, we can waive the loan contingency early on. Um, we can, so, and honestly, I find a lot of sellers are starting to be a little bit more sympathetic to these first time buyers and to the regular people that are in the housing market, because what the sellers are realizing with all these cash offers is some of them are people who sold their home in Oakland Hills to move to Florida, but a lot of them are large corporations investing large amounts of money in these cash deals. And what we're finding in California is a lot of our sellers don't really want to contribute to that problem of the investors buying up all the real estate and pricing out all of the regular, um, you know, owner occupants. So it's a combination of strategies. I work with some very aggressive real estate agents who are really good at, part of it is the networking, the relationships what they have with other agents in the market, and so it's just a lot of different factors that combine years of experience in being able to help these young buyers achieve their dreams.
So what kind of credit score requirements are there nowadays for mortgages?
Well, that is another excellent question. Actually, some of the down payment assistance can go as low as 600 credit score. So obviously, the better credit score, the higher your credit score is, the more favorable your financing terms are going to be, right? But for programs like FHA, a lot of people don't realize that FHA doesn't actually have a credit score requirement. So the program itself has guidelines, and then the lenders put guidelines on top of the FHA rules. So I have some lenders who require a 620 score with the FHA loan. I have some that require a 580 score, and I even have a few that have absolutely no credit score. So, if you're able to come in with a 780 credit score and a significant down payment, then of course you have a lot of options for great interest rates and everything else. But even if you have less than perfect credit, we're still able to get people in there with, 580 credit score. So the down payment assistance typically requires a 640 to 600 for one program, 640 for another, 680 for another. So they're real flexible terms and requirements.
What about boosting credit scores? Anything that you do for a quick boost to somebody's credit score if they're kind of close to qualifying, but they're not there yet?
Yes, I love helping people get their credit scores up. So I have a few tools that we can help with that. There's a what if simulator. So generally, a good rule of thumb is if you can get your balances down to 30% of the available credit, that's going to help your score go up. The algorithm scores you based on the length of time that your accounts have been open, of course, your on time payment history, and the relationship between your available credit to your balances that you have outstanding. So that's one little formula we can give if you have access to go out and pay those down a little bit. But a really great secret tip is get your grandma to add you as an authorized user. So grandmas, moms, dads, these people who have established credit for, because one of the algorithm is the length of time your account has been established. So young people haven't been alive long enough to have an account open for 20 years, but if they go to mom, dad, grandma, add me on as to your Sears account, to your whatever account that you've had established for, you know, 15, 20 years, then you're immediately linked to their credit and you get the benefit of that payment history on that account.
Hmm.
And I've seen that increase people's credit scores 80 to 100 points over a few months of
Wow.
reporting.
What about veterans? What's going on right now with veterans and home loans?
Kind of some exciting news for veterans. There's no long loan limits on VA loans. So as long as you can qualify for the payment, you can get a house with zero down if you're a veteran. So
That's fantastic. It always used to be like 417 or something like weird like that, I think.
yeah, so it does go bumps you into the jumbo pricing. Once you leave the conforming loan limits. But for example, my stepbrother is a veteran in the San Francisco Bay Area, and uh, I don't know if you're too familiar with that market, but there's barely anything in the whole region less than $1 million. So that's kept a lot of veterans, prior to, I think it was last year that the pricing change came out where there's no longer a loan limit. And yeah, so as long as your income qualifies you for $1 million plus purchase, you can uh, do that with zero down with VA within the guidelines. So I had another veteran who wanted a $800,000 house, but because their credit score was a little bit challenged, they're only allowed to borrow 90% of the loan to value, but still no loan limits on the purchase price.
Wow. Now, VA loans go into 100%, correct?
Yes.
So
Yes.
somebody can get as
And
much as 100% finance with no cap on how much, as long as their income supports it.
exactly. And no mortgage insurance. So with, a conventional loan or FHA loan, you're going to pay considerable mortgage insurance relation, depending on how far over 80% loan to value you go. So VA, great interest rates and no mortgage insurance.
So how does somebody know which of all these options, like which is the best mortgage product for them?
Well, that's when you really want to talk to somebody in the industry, which experience and knowledge of all these different products. So a lot of lenders have like their own particular niche product and they'll get you approved if you have a 800 credit score and a 20% down and, no issues. And those are kind of your cookie cutter shops, I think. So I think somebody that has been in the business and experienced all the ups and downs of the markets and the ins and outs, there's definitely research you can do on your own to find out about your mortgage options, and certainly first time buyer workshops, education is recommended, but definitely working with someone with experience in the industry that can, guide you through all the options because, yeah, you might assume one thing, and once you get all the facts out in front of you and the um, credit reports and everything, you kind of find that you may end up with a different product than you originally assumed you were going to go with.
What about terms? You mentioned interest rate earlier. Like, well, what kind of terms are out there for mortgages now? Do you prefer 15 over 30 years? Like, what kind of interest rate ranges are out there right now?
Well, that is definitely becoming a bigger and bigger challenge every day. So you've probably heard the Fed is increasing interest rates and they plan on increasing them at least 5 or 6 more times this year.
Yeah, crazy, like
So,
7 times. I mean, it's crazy. Yeah.
yeah. So, and what's really interesting is the Fed might increase them by a quarter of a point, and then you wait 3 weeks and the Fed's minutes come out, and all of a sudden the rates actually go up by a whole percentage point overnight. Uh, and, the war in Ukraine is causing havoc on more than just gas prices. So the whole market is just full of uncertainties right now. Um, and I mean, really, this zero interest rate we've been having for a few years is not sustainable. So it has to even out at some point. So right now, I just priced a uh, zero down payment assistance loan with a borrower with about a 680 credit score, and the rate's going to be 6.5%. So somebody who comes in with a down payment on an FHA loan, maybe they're paying 4.5%. And somebody with 5% down, 700 credit score, they're probably paying about 4% on a conventional loan right now.
Wow.
So, it depends on the product, but yeah, it's definitely much higher than these 2% rates we saw for a couple of years.
Hmm.
And so now, like, for example, in California, uh, well, let's rewind to 1997 when I bought my first house. It was a little over 100,000, and my rate was 7.75. So now that same house is worth 700,000, and the rate is going back up towards 7.75. So even at a 5% rate, you're paying 700% more for the same house. So first time buyers are really having a challenge. We're seeing co-borrowers, adding some non-occupant parents to the loan will help you qualify for more purchase price. And just really challenging market for young wage earners to get in to one of these houses for the first time.
So I'm interested to know, like, how does that affect the mortgage? So if, let's say you have any kind of insight of like how much an interest rate really has an effect on what somebody's payment really is.
Oh yeah. I mean, so let's just take the example I gave you a minute ago with my first house. My payment was about 1,100. So the person who's buying that house in today's market is going to pay closer to 4,000 for that mortgage.
Wow. Because the value of it's gone up so much.
Right. So it has to do a lot with the purchase price and the interest rate, of course. So, you know, um, but yeah, so my borrower who's looking in around the 400,000 price range right now, she's looking at a 4% interest rate and a payment at around 2,200. And if her rate goes up to 7%, her payment's going to be over 4,000.
Wow. Say that for me one more time.
Uh, yeah, well, generally speaking, roughly speaking, the interest rate for a $400,000 purchase at 4% right now would be around 2,200. And if the rate goes up to 7.5%, it's going to be closer to 3,500, 4,000.
That's crazy. That's like almost double for the same. Man, that's just absurd.
Yeah. It's going to be real interesting seeing how this all stabilizes and equals out over the next few years.
Well, what do you think will cause that? I mean, because I think all of us look at this how inflated the market is in Tampa. It's absurd. Like, I mean, I looked at a 3-bedroom downtown. It's $4 million. I mean, no exaggeration. Like the unit I looked at is $4 million for a 3-bedroom downtown. So it's got to level off at some point. You kind of have any insight, your knowledge and experience of what you think, when you think that may happen, like what kind of conditions can cause that leveling off?
Man, I did live through the subprime crash of 2008, and that's what we saw was just unfortunately drastic circumstances causing, a real crash, a bubble, boom, bust, burst, bubble type of thing. I because I don't see wages increasing dramatically, uh, you know, to continue to cover the rising costs. And yeah, it's unfathomable, really. I've been watching. So I'm in Sacramento, and our market, we compare our growth to San Francisco Bay Area market, right? So we always kind of stay a little bit behind them, but you would think that it would level off at some time naturally, um, and the prices would just sort of stay the same. And it's kind of shocking that that hasn't happened yet. I I mean, I can even make a prediction in this crazy market. We've just seen so many things these past couple of years that we've never seen before as a country, as a society in
Yeah.
lending. I mean, we've never seen zero interest rates before. We've never seen the effects of, a worldwide pandemic and shutdowns and just all of this stuff. And now, what we're on the brink of some something going on over there in Ukraine with Russia and all of that. It's just so much uncertainty. I wake up and there's some news story about, the gas prices or the gas pipeline. And next thing I know, I get a pricing update from my lender that pricing just worsened. So the response in the market is oftentimes pretty immediate to these just unprecedented events that are going on around the world.
What about interest rates? I mean, interest rates are going up. We all know that. The Fed raises them. We all feel it, and all of the rates that we pay on things like mortgages go up. How long can you lock in an interest rate for?
Well, depends on the lender, but I've seen lenders offer, a 60-day rate lock up front. Some of them are willing to go 90 days. I have one right now that has been locked since February, maybe early March, and we just keep extending the lock because they're not ready to close yet, quite yet. So, um, the thing is, it costs money to lock the rate and extend the rate. So the longer the lock period, the more the lender is going to charge you.
Hmm.
So, maybe it's around 3/4 to a point to extend your rate for 30 days. So if you're a $4,000 purchase and we locked your rate last month, it's going to cost, 3 or 4,000 to extend your lock for another month. So this is really impacting new construction. In fact, interestingly, one of my buyers, a young couple, they've kind of started getting a bit discouraged with being beaten out of offers. So they've gotten a few cash buyers to come in and put 80,000 over the asking price, and they just weren't able to compete with that. So now they're thinking we want to buy a new house, and it's going to be done in August. So they called me and told me this, and I had to explain to them that unfortunately we can't lock their rate up front this far in advance, right? And so if the house in August, then that's when we'll be able to finalize the loan. Maybe we can lock the loan in June. We could potentially lock it for 60 days, maybe 90 days if we really want to pay a lot to lock that rate. But what's happening with new construction is the supply chains are impacting the completion dates. So that house that's predicted to be done in August might not actually be done until next March. And now what
Wow.
about your rate lock?
Yeah,
So
it's crazy.
yeah, and so then by the time uh August gets here, December gets here, our rate's going to be 7%, 8%. So they might go into that house, put down a 7,000 deposit that the builder wants to secure the contract, and then by the time August or December gets around, they no longer qualify for a loan on that property at all because the rate went so high that their debt to income ratio no longer works and they just forfeited their $7,000 deposit. So
Oh, you said crazy world.
yeah, it really is. It's crazy. It's unpredictable. But we're just going to keep getting first time buyers in and helping them become investors. A lot of people are trying to do this Airbnb hack. These kids and they're hacking everything all the time. So they're doing, you know, uh, using their leverage as first time buyers to move in to become investors to live in the house for a year or two, and then maybe they rent out a room or two on Airbnb, and then eventually they rent the whole place out, and now we've got to go sell them a new house to live in. So we're definitely still optimistic that these kids are going to be all right and we're going to be able to help them get into a home of their dreams and everything.
It's interesting. One of the things that you mentioned too, is of course, income's not going to climb as fast as home prices climbing, but it made me think about how does somebody know roughly how much home they can afford?
Well, that is a very great question. As a matter of fact, on my website, I have a first time buyer's guide that will show you how much you can qualify for. So there's a pretty simple calculation. You just want to take your gross income and subtract your bills and find out what 40% of the remainder is. So basically, the lender's going to let you borrow up to 40 to 50% of your remaining income. FHA lets you have a little higher debt to income ratio than conventional. And so you just do a very simple calculation. And I've actually got a little formula that you can get on my website uh, at firsttime buyerhandbook.com. And it actually walks you through the calculation, gives you a factor so that you can determine your per thousand cost. And you can roughly estimate how much you can qualify for, how much your payment's going to be, fairly simply.
What website? What link was that again?
So it's firstttimebuyerhandbook.com.
Okay.
And that's actually going to redirect you to my website, which is stephanieboyd.com. But I spell my name a little bit funny. So unless you can remember to spell it like Gwen Stefani and not Lady Gaga, or actually either one of them, they both spell their name the same way I do. So STEFANIBOYD.com. And we just linked it up with firstttimebuyerhandbook.com.
Yeah.
And
Okay. Sounds good. Firstttimebuyerhandbook.com. All right. Perfect. Wow, Stephanie, this was fantastic. Thanks so much for coming on and sharing with us today.
thank you so much for having me, Ty. It was great chatting with you.
Yeah. So where should everybody go? Should everybody go to your website, or since your name's a little difficult to spell, should they all go to firstttimebuyerhandbook.com?
Firstttimebuyerhandbook.com is going to be linked up to my website. So yeah, that would be the one to hit.
Awesome. Well, again, thanks for coming on.
Okay, thanks again for having me. Have a great day.
You too. So everybody listen, if you're watching this, listening, you can see what it's like to talk to somebody that has a lot of experience in this industry and a lot of creative financing. We often talk about financing and stacking financing, but You probably never heard a mortgage broker talk about it the way that she has. And these are the kind of strategies that help you get in to be able to buy more home, help you have lower payments, help you get in with less money down, all of which are things we desperately need right now. So if you're a first-time home buyer, or even if you're not, make sure you go to firsttimebuyerhandbook.com. That's firsttimebuyerhandbook.com. And if you go to firsttimebuyerhandbook.com, you go right to Stephanie's website, and there's a ton of stuff here. Pre-qualification. You can see how much you can qualify for, a lot of tools and resources that'll help you both buy a home and even refinance a home. Could be a great time for you to do that right now as well. So you can either go to firsttimebuyerhandbook.com, or you can also go right to Stephanie's website, which is Stephanie, STEFANIBOYD.com. It's StephanieBoyd.com. And that's Stephanie spelled STEFANIBOYD.com. So StephanieBoyd.com, or go right to firsttimebuyerhandbook.com for everything you need to be able to qualify for a home loan. So thank you very much for tuning in. Make sure you visit firsttimebuyerhandbook.com.